It's Tuesday, the 3rd of October, 2023. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories to get through in 5 minutes, so let's get cracking. Story number 1, global share markets, including Australian equities, are in the doldrums at the moment, with markets in the US and locally down 7% and 6% respectively since their July highs, and there's not a huge amount of confidence about the next few months.
September really was a pretty awful month for equities. Aussie shares were down 3.5% for the month, and the market is now trading at about the level it began the year. On Wall Street, equities fell nearly 5%, across the globe was 4%. The reason for the sell-off is that central banks around the world and investors now believe interest rates will stay higher for longer, something the Reserve Bank is likely to talk about today. That's pushed up bond yields. In fact, the 10-year bond yield in Australia last week hit its highest level since 2011. Now, as an investor, you can get pretty good returns in close to risk-free bonds. That makes them relatively more attractive than other risk assets, like equities. Getting a bit technical here, Michael, sorry about that. Hence the sell-off. Not helping is the risk of recession in the US and other places. Rates remain high, plenty of uncertainty around the Chinese economy, and oil prices are very high. Investors don't like equities when there's a recession coming.
Yeah, a little bit technical, but I think I followed it. If I've got this right, bonds are popular with investors and shares aren't, so share prices have been falling. Does this mean, though, that they will keep falling, or maybe there are a few bargains out there?
Well, yeah, probably. Now, markets tend to oversell. They also tend to overbuy. But I think it's better to answer your question by quoting an expert. We're not an investment advice podcast, of course. AMP Shane Oliver believes share markets have been oversold and are due for a bounce. But the risk of a further fall beyond any near-term bounce is high. He's positive on shares over the next 12 months, but it could be a rocky road.
Okay, on to story number 2 now. While home prices have rebounded with some cities hitting new highs last month, the upper end of the market, Sean, is losing a bit of steam.
Yeah, so the upper quartile, the top 25% of the capital city housing market led the recovery earlier this year. Now its pace of growth is slowing. So in the September quarter, the most expensive 25% of homes jumped by just over 2%, while the cheapest 25% jumped by more than 3%. In Sydney and Melbourne, the middle of the market is recording the highest growth rate, according to CoreLogic. It seems that affordability factors, in part higher interest rates, are starting to kick in. CoreLogic released its full September quarter house price data yesterday. It shows growth has eased from 3% in June to just over 2% last quarter. Adelaide's leading the way, followed by Brisbane and Perth. Sydney's next, then Melbourne and Canberra. Hobart, however, is going backwards.
Story number 3, Sean, the Reserve Bank meets today, you mentioned this earlier, to deliberate on interest rates, with pretty much everyone expecting the official cash rate to remain at 4.1%. But what will get plenty of attention is how much change is in the accompanying statement, particularly since the central bank has a new governor, Michelle Bullock.
Bullock is under a bit of pressure. She needs to demonstrate her inflation-fighting credentials. Hence, the Reserve Bank statement is likely to continue to say that price rises remain stubbornly high and rates need to stay higher for longer. But she also has an opportunity to break away from her predecessor, Philip Lowe, and subtly refine how the Reserve Bank thinks about inflation and full employment. Now, she's politically savvy, Michelle Bullock. She's watched the actions of Treasurer Jim Chalmers and his relationship with Lowe, and will have to be wary about, shall we say, doing a bit of job getting on with her boss. Statement comes out at 2:30 p.m. today.
All right, we'll hear all about it in this afternoon's afternoon report. Story number 4, Sean, there was plenty of sport over the weekend, and well done, of course, to the Collingwood Magpies and Penrith Panthers in their respective grand finals. Europe won golf's Ryder Cup over the US, and Australia's minuscule chance of reaching the quarterfinals in the Rugby World Cup remains alive after the Wallabies beat Portugal. But, Sean, the biggest loser over the weekend may well be online bookmaker Betr.
Tens of thousands of punters took advantage of a launch offer earlier in the year from Betr that gave 100-1 odds of Penrith winning the Rugby League Grand Final this year. Now, of course, Penrith won the previous 2 years, so the odds were generous, to say the least. Maximum bet was $10, but 10 times 100, that's $1,000. According to the Financial Review, Betr's payout on the Panthers win will top $40 million, which will probably be the largest payout in the history of Australian sports gambling. Late last week, Betr was offering hundreds of dollars of cash to punters ahead of the game to cash out. It also said punters that it could take weeks for any money to be delivered into their accounts.
Okay, last one. Story number 5. Forget about road rage, Sean. The new phenomenon taking over car drivers is charge rage, with British service stations introducing marshals to kind of referee fights between EV drivers battling for access to plug-in points.
Yeah, so Moto Chief Executive, Moto is one of the big service stations in the UK. Its Chief Executive, Ken McMeekin, warned that UK's motorway service stations are facing growing public disorder. Basically, there's not enough EV chargers, according to a story in the Telegraph of London. It means motorists are facing long waits, people are getting angry and confronting each other and staff. Now, back at Christmas, EV drivers in the UK were forced to queue up for up to 6 hours at some service stations. Unlike a petrol or diesel engine that takes just a few minutes to fill, a typical electric car will take at least half an hour to recharge. Moto, which runs 49 motorway services across the UK, has already introduced marshals at some stations to prevent conflicts.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It is Tuesday, the 3rd of October, 2023. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed Business News wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.